I was just asking you about the kind
Yes,
of
it
factors
does.
that you see driving the Kenyan currency today. We've got the shilling down against the US dollar. No big surprise, because we have seen generalized dollar strength across the world today. But what are we seeing from the Kenyan front?
What we're seeing is a lot of foreign inflow in terms of the fixed income market. We have big foreign play in the fixed income market, with many people chasing the attractive yields that are currently in the market. This has supported the shilling in the last few weeks. We have seen it strengthen 2.5% from the starting of the year.
Yeah.
So that's been a good factor behind the shilling strengthening.
So
We have also seen the central bank maintain its tightening monetary stance. So on a macro level,
Yeah.
we have seen that support the shilling much more.
Sure. Let's talk about today, though. We're seeing that weakness, as I said earlier, at 0.4% against the US dollar. Are the factors that were playing
Yes.
out on the global level the same factors that are driving the shilling weaker today?
Sorry, just say that again. I didn't catch your
I was
question.
just trying to establish the kind of factors that are driving down the shilling today, because you're talking now about how the shilling has been supported by the high interest rates that we're
Yes.
seeing in Kenya. So the
Yes.
Kenyan assets are priced better versus your global assets because of the high interest rates. And I was just asking today, the weakness that we're seeing in the shilling, what is that due to? Why are foreigners, or why are people selling Kenyan assets that we're seeing reflected in the weaker currency?
Okay, we're seeing local demand from the energy sector coming into the market. They're a big player in the market with regards to the demand they bring in, especially on the US dollar front. We see this on a monthly basis, in that the cycle from when their payments do come into play, they do come into the market pretty aggressively, searching for the dollar, and that is reflected in a small hit in the Kenya shilling seen today, and as I remember correctly, seen yesterday as well.
So what's the outlook then for the shilling for you? One idea that we've been following up for the past couple of weeks is that we've been seeing weakness on the equities front, and indeed today we had the market slightly up. That is on the equities front, slightly up, and yet over the past few weeks what we have seen is general weakness on the equities front, and the suggestion has been that some of that money is finding its way into the fixed income arena. Are you seeing it?
Yes, we have. It's a bit of a complicated situation, in that we saw a big drive away from the equity sector into the fixed income bracket at the better part of last year, when the interest rates in the fixed income started shooting up, and a lot of the equity counters weren't doing as well as they should have been. What we're seeing now in the last few weeks is a lot of local demand shifting back from the fixed income market back into the equity sector. So the general weakness that you've seen in the equity front has been improving in the last few weeks, but in terms of historical numbers, it is pretty low.
Yeah, indeed, the
And that's
volumes
the general
today were
weakness we're
very,
seeing
very
at the
strong.
moment.
We had equities, I think, doubled the amount of shares that were sold, that were traded the previous day at 25 million. So there definitely appears to be some money that's coming back into equities. But let's look ahead. 4th
Yes.
April, the MPC will hold its meeting. What's your expectation out of that meeting?
We expect the central bank to maintain the rate at the moment. There is a fear that inflation may not see a big improvement as was earlier expected, on the back of the fears around the energy sector, on the back of oil prices rising globally. We do expect central bank to maintain the rate, just to keep on giving support that the shilling needs going forward on the danger of this. Inflation numbers are expected to drop, but the drop is not as big as many players expected coming into the new year.
But how long can they hold up, given the fact that we know that they have been under pressure to try and reduce the high rates that we're seeing now, and also the expectation that they will try and reduce the cost of doing business in Kenya?
They will not hold it up, say, for the better part of this year.
Yeah.
They will start signaling to the market that they will be relaxing on the monetary stance.
When do
but
you
at the
expect
moment,
them to?
the shilling still. We do expect that to see that right around the end to their financial year. So that comes around June, August.
Okay, so you don't see another cut coming in through here. So when the cuts do come, how aggressively do you think they will be able to cut?
I think they will do it on a gradual basis. There is a lot of room for the CBR to come down. many players expecting it to see a 14% level or even slightly lower, 13% level by year end. I do not expect a drastic cut just because of the fact that inflation may not see the improvement that was earlier expected.
Yeah.
So we do expect the shilling to be protected from the CBK front. And we should see that through a gradual cut in the base lending rate, and not as an aggressive cut as many players would have liked to see early on.
Yeah. So in this gradual loosening cycle, how many percentage points do you see coming off that CBR?
That will be a hard question to actually put a number to it. There are many factors that do come into play.
Yeah.
I will be shooting myself in the foot if I do give you numbers, and they're pretty far off when the numbers do start coming to the public. But I do expect probably 100 bips drop first to start with. And to go forward, we'll see 100 drops going forward gradually till the 14% level. That should give us a good 4 months over which we can see that drop.